investingstrategy.com.
Hi, it's Chris again, taking a look at the upcoming October 31st trading session, and as per usual, I have the economic calendar in front of you. First thing, of course, is the Japanese interest rate decision and statement. Let's at press conference. Let's be honest here. There's almost nothing the Bank of Japan can tell us now that would be a surprise. Yes, they have loose monetary policy. Yes, they will continue to be loose. Yada yada yada. Do not expect anything out of that, even though it's listed as a high-level event. Really, it's not until we get to core CPI and CPI later in the day that we feel the markets will move. At that point in time, we're probably looking at the euro dollar, DAX, CAC, European indices, etc. A little later than that, we have Canadian GDP month over month. There's the core PCE price index is kind of a mover in America, but really it's probably going to be Canadian GDP more than anything else. There's Michigan consumer sentiment, probably not a major driver of the market either. I think that we're going to see a lot of continuation of what we have seen for some time. And with that, let's take a look at some charts. Okay, things at the dollar CAD pair, as you can see, continue to struggle around the 112 level. Again, that Canadian number could move this market. If we get above the highs here, buying calls will be what I do. I don't have any interest in buying puts. There's just too many minor support levels below to be bothered with it, all the way to at least 110 and possibly as low as 108.5. I think that there are plenty of buyers. So really, it's either going to be calls or nothing at all in this marketplace. Looking over the S&P, you can see we're having another positive day after initially falling, on Thursday as I record this. But the reality is we should be heading to 2000 and 2020. We believe in buying calls on short-term dips, on short-term charts. So perhaps like the hourly chart that I have up here, you can see there was a buying opportunity. And so forth. Really, it's hard to find a reason to be bearish at the S&P 500 right now. A couple hammer candlesticks, of course, look positively bullish on the daily chart. Only a matter of time before we hit 2020. And the euro dollar, as you can see, has bounced significantly during the day to form a hammer. We still are bearish. We believe that buying puts every time it rallies is probably going to be the way to go. 125 is calling, and if those numbers out of the EU are less than anticipated tomorrow, you can probably see that as a catalyst. Either way, we would not be buying calls. Just being patient and buying puts every time we bounce is more than likely going to be the way to go. With that, I've taken a look at the Friday, October 31st session.